Deepak Satsangi of Noida invested in IPOs of various companies last year. He got allotment in 2 companies, but both the companies had poor listing and were below their issue price. He was disappointed at the show of these companies. He had applied after looking at bumper subscriptions of various companies. He was wondering how a stock with so much buzz could perform so poorly on listing. Recently, he heard about IPO allocation fraud. So that's the case. That's why people like us are getting sucked in the IPO, he said in an angry tone. He reached out to his friend Ranjan Gulati, who understands the share market. Ranjan explained the complete story. In the past 1 month, along with LIC, Delivery Prudent Corporate Advisory Services and Venus Pipes and Tubes launched their IPOs. In all these companies, there were a lot of applications for retail investors. As per the estimate, there are 30 to 70% of bogus applications in IPO.
The difference between genuine applications and total applications can only be known after the issue is closed. Till then, only a number of applications in each category can be known. That information can be taken from exchanges, but initially, even rejected applications would be shown as genuine applications. The reality is known when the company comes out with an ad after the issue closes. However, we get this before the listing. This gives information about the number of bogus applications because every company has to give information through advertisement on the basis of allotment.
For example, let us talk about the LIC IPO which came out recently. There were 73 lakh applications, out of which 20 lakh got rejected. This means 28% of forms were rejected. In Delivery IPO, there were 1.73 lakh applications and 58% of them were rejected. So there is a lot of buzz about IPO subscription. But the interesting game goes on behind the scene.
Now let us look at this whole game. There can be various reasons for the rejection of application, like entering the wrong name or some other misinformation. But that portion is very less. Market experts say that many brokers apply for IPO on behalf of the customers. They don't even take the consent of customers, so afterwards, customers deny paying for the IPO. It seems that brokers do this intentionally so the total number of applications become large. That will attract more people to the IPO. So, this could be a combined action of brokers and the company issuing the IPO. However, the good news for retail investors like Rahul is that SEBI has recently issued the circular that if the required money of the investor is blocked in the bank account, only then the application will be considered valid and shown on the exchange. So this can stop the game brokers play. However, this new rule will be applicable only from September 2022.
Amit Pamnani, Chief Investment Officer of Swastika Investmart, says that SEBI is proactive in this matter. SEBI continuously improves the rules and regulations to ensure transparency and safeguard interests of investors. Now, UPI-based application process is also being followed so that funds get blocked in an investor's account. This helps in minimizing the chances of cancellation or delay. This step of SEBI may curtail the misdeeds in IPOs. Still, investors need to be careful. Don't follow the herd and apply for an IPO if there are a lot of applications. Before applying in an IPO, research about it thoroughly and apply for it only if its fundamentals are strong, and consult your financial advisor before making any investment.